Good morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for gold, silver, and platinum, being recorded on Saturday, January the 31st at 11:10 a.m. Pacific Standard Time. Well, needless to say, we are all well aware of what took place over the last 2 days in gold, silver, and platinum. It was something that in my 40 plus years of following gold, of analyzing the markets, I have never seen moves like I saw yesterday and Thursday in the precious metals. Now, there are varying reasons that contributed to this crash. There's nothing else I can say. It was a crash. The speed, the velocity, the volatility, the explosive moves that just didn't seem that they were going to stop, and they didn't. At one point, gold was down $600, where it just absolutely blew through all of those gains that it made and actually was heading down towards the lows that I would anticipate are going to start coming in on the intermediate fourth wave, which I believe we're now in. Now, what kind of was behind this? Because it is a perfect storm of reasons if you really break it all down. I've read stories where that the Trump administration's nomination for Fed chair um, was the reason that it really tipped the market right over, and the massive selling began. Now, that may have had a fractional response. To me, Um, I'm aware of who this person is. I'm aware of their accomplishments. They were on the Fed board in the early 2000s, I think 2006 to 2011. They held a term as Fed governor. They also represented the Federal Reserve at international conferences. But from my understanding, and is that this person, Mr. Warsh, is a fiscal conservative. And so, at least when it comes to monetary policy, is not opposed to raising the rates to fight inflation. In fact, was behind a lot of that raising of rates that we saw, or just what the arguments were back during his term and since. So, but part of it is that he happens to also be the son of a close Trump ally who actually, I think, is a billionaire. I'm not sure, but obviously has money and contributes. So who knows? I'll do you a favor, you do me a favor. I don't know, but I'm sure that's part of the thought process. But folks, that's saying a lot, because I don't believe the actual nominee is like that. And if it is, I think we'll find out very, very quickly. So if this gentleman is approved by the Senate, then he will take over the role of Fed chairman in May as Jerome Powell's term ends. I personally don't think it is a bad choice compared to who I was seeing, or who we were seeing as possible nominees, who were definitely Trump cronies, definitely, you know, mm, people that you don't want sitting at the head of the Federal Reserve. I mean, they got one Fed governor in who just barks everything that Trump wants. And I don't think that we're going to find the same thing in this particular person should they get nominated and succeed in getting the job. But time will tell. Now, also, what else was behind all of this? Well, we just saw the dollar start to turn. In fact, the dollar went up pretty strongly on Friday, I got to tell you. And that brought out a lot of sellers. Party's over, get out. The just the sheer fact of how quickly we were dropping produced a lot of sellers. hopefully on a retail level, but also on an institutional level. Also, yesterday was the end of January expiration, so we can consider it a monthly, even though the monthly goes it's the third Friday. This was the last Friday, and it was huge. GLD and just options on the futures market were extremely active. We saw volatility, implied volatility, go through the roof between Thursday and Friday. That added to it. Uh, just some of the, yeah, it was a cock. It was just like a whole bunch of stuff that kind of went through. And it's interesting because what we're also seeing is that there's an article that is actually, or just a statement that's being made, not by JP Morgan Chase, but by someone else who said that JP Morgan covered shorts at the absolute bottom in silver. And it actually wasn't the absolute bottom. I mean, it was the absolute bottom in silver, but it wasn't that they were covering a short down there. It was deliveries. It's like making deliveries, delivering silver. So that, in effect, covers the short. So instead of having to do it at 122 or 115 or 100, they got to do it down really low. So smart trade, I don't know, but I don't see how that would have had any effect because it comes out after the market is done. We don't know actually what the size of any of the cover is, or just the fact that how many contracts or how much bullion is being shipped out. So, but I'm sure it was large, and a lot of that could have come from just the options and the settlement of the options. A lot of that could have come from put holders who actually exercised their put, which is to sell silver to somebody else at a very high price. Um, all these things get to be put into play and create the perfect storm. Now, I'm going to go back here to gold, and I'm going to start here with gold. I have been discussing, and as last week and the week before, that what I was looking for was the completion point of an intermediate third wave. So here I am out here on the long-term future, the monthly futures chart, and again, counting a primary degree five-wave advance. And primary one and two completes or in primary wave three. Intermediate one, two were complete, looking for the completion point of intermediate wave three. I believe we hit it. And I believe it was 56.28. That was the high. And it was a spike. And it was like, oh my God, did you see that? Because if you didn't, it was gone. It fell right back down. Why? Well, all kinds of reasons. I wasn't there to witness the trade. I wasn't there to know who the trader was or what the reason was or why they needed what they had to go in and buy. All kinds of things behind it. Fact is that it spiked and was done. Now that kind of gave a little bit of a signal like we're done and that the market started to come down. Now it played above 5,000 for a day and a half. And it was Friday where when it started to break, it was just out of control. And yes, all I can say is that it was a panic, but reverse the panic to the upside and now put it to the downside. You couldn't get out fast enough. Now, one thing that I do know, and again, Dealers now in the precious metals are algorithms. So they're doing all of this ahead of, a physical person standing in a pit making a market. It's all electronic. It's all algorithmic. So it goes very, very fast. But what was interesting is that how algorithms would come in and hit the bids and drop the prices up to $10, $15. And then someone had to come in and bid, and they would bid $5 up or $7 up, and then get crushed right away, get things filled. So there were vacuums in this process, this quote unquote fair and orderly process of when coming in and bid and offering. And if you were watching the trade and you had the ability to see bids and offers and how they came in, they were all over the place. So the algorithms themselves couldn't keep up with where the market was when orders were being sent out. So there it was, and it was incredible, folks. It truly, truly was incredible. But here on the monthly, and I just have to bring this down a little bit and see if I can get it open. There we go. Yeah. So here's where I can show you. Here's the third. But now let's remember, I've talked about this several times and I mentioned it in several of our podcasts. It is normally within the fifth wave, particularly in gold and silver. It's in the fifth wave that we see the longest and the strongest wave. So here we are starting minor wave 5. Now, within minor wave 5, there's going to be 5 waves of minute degree. For here, 1, 2, 3, and 4. So here's where minute wave 5 started. Then we have from minute, we go down to minuet. Here's minuet 4, so minuet wave 5 started. Here is the sub-minuet fifth wave starting at 43.19. That's just the sub-minuet fifth wave going up. Let me bring this down. Sub-minuet. And let me say, on December the 29th, the low was 42.84 on December the 29th. This high was on the 26th of January. Less than a month later, gold was hitting 56.26, not 28. In less than a month, or let's call it a month, gold went up $1,300 very quickly. So, fifth wave, fifth wave, fifth wave, fifth wave. So when I move it back out to this monthly chart, it is nothing but a straight line up pretty much from there, but definitively from when minute wave 5 began. Yeah, we had a little bit of a downturn, and that was came about because of adjustments being made to margin requirements. But from that point, look at that monthly chart. That's from that low. It is a straight rocket parabolic move. So in all honesty, and I also said, I was surprised at the amount of the speed and the amount that the market dropped. I went as so far as to say that, and actually I made these comments in an update for the S&P or the NASDAQ, on which I apologize, but so be it. That what we were witnessing is $300 swings in gold, in the price of gold. $300 to $400 swings. That's something I never saw. Then it got boosted. We had a $600 swing on Friday. It was stunning. I mean, it took your words away. There were no words to kind of go, what just happened? Did the metals crash? Effectively, if we have to go look up the term of what a market crash is, yeah, they did. They did. All, well, the three that I cover. They crashed. Now, did they crash off of levels that we were expecting? Well, yes and no. Was I expecting 5,600? No. Did I have fibs that went up that high? Yes. So I could not discount and say never going to happen. When it did, I was surprised. 5,500 I had pretty solid, but I thought that's kind of where it could stop. So that last push did surprise me. But as quick as it came down, I'm like, that's got to be the top. Now, but you don't go out and make a call like that because who's going to sell it? So, and I don't make trading recommendations. But in any case, here we are. So I have labeled it the subminuet, the minuet, the minute, the minor, the intermediate. So we are in an intermediate fourth wave coming down. It should consist of an ABC. Well, let's start breaking this down. Is that going to be wave A? Because look at where we are. So first of all, just take a look and see where, and honestly, folks, I have put out that we got to look to the fourth waves to where we think this can come back. So when I put up the fibs on the intermediate degree, it doesn't come back down to the fourth wave of one lesser degree. Intermediate four should come down to minor four. It doesn't. So when we actually get the fibs up there, what are most common? 0.382 and 0.50. 32%, 38%, 50% retracements. Well, look where those line up. Minuet 4, minute 4. And that's what I was suggesting prior. It's like when we get this correction, that's what I'm looking for. Now, truly, here's the other side of this coin. If the precious metals are crashing and are going to continue to crash, then I would suspect that they're going to come down through 3872 or 3900, 3300, and end up back at 1600, which is that minor four down here. 1685, I think it is. 1680. Nope, sorry, 1640. So then it would meet the guideline that Elliott left us, that a fourth wave in motion should find its terminus, its endpoint, within the fourth wave of one lesser degree. Intermediate degree third, one lesser degree is this minor. Now, why is that so extensively exaggerated over what we normally look for? Because in the precious metals, it is the fifth wave that extends and basically in the metals goes parabolic. You'll find this pretty much across the board in 1980 and 2011 and now in 2025, 26. It's exactly what happened. And if we, like I just counted, there's a fifth, there's a fifth, there's a fifth, and there's a fifth. So you see the intensity pick up as we got smaller in degree. This sub-minuet fifth wave knocked my socks off, folks, to be honest with you. I was like, oh my God, look, this is like a tiny degree. And it's going up $1,300 in a sub-minuet degree. The power of the market, not necessarily the power of Elliott. It was the power of the market. It was the situation. It was uncontrollable. So the only thing that actually the brokerage firms have and the exchange has is to raise the margin requirement, which they did many times, which, by the way, in case you're just wondering, they did lower the margin requirement after Friday. Don't know if that's a smart idea, but they did. They did bring it down out of the stratosphere. And now it's just in that next layer down. in any case, folks, I truly am just awestruck. And here's the next thing. This is all trading that is algorithmically controlled. Buying and selling is algorithmically controlled. When an algorithm, which is putting through the trade, has an order, it is going to execute the order. Period. No taking it back. You're buying and selling at the market, you don't get to take it back. It's going to be executed in seconds before you get a chance. Now, human beings, I don't think it would have gone that fast or that far because, see, we have emotions. We have emotions. I think we would have seen some pretty silly selling, a lot of market selling, a lot of fear, which we may still have seen, but algorithms aren't fearful. Our algorithms just perform, just do what their program is. So it adds a whole additional view when you're looking at this going, oh my God, look what they're doing. It's like they are computers. So is this I don't want to say wake up call, but that's the first thing that came to my mind. What we've seen it in our equity markets, folks. We have seen it over there as well. We've seen it in our options markets. We're getting it all the way across the board. The difference between a human being have to physically go in and say, do it. So there could be panic buying or panic selling, but at this degree, it was algorithmically controlled and there are no emotions. And that is kind of can be the scary part, at least for me. Uh, when you're attempting to step into a market and it's not, and there are no emotions, you can't really say, well, that was panic buying or that was panic selling or, that was emotional because you can't judge it. My own internal fear or excitement or whatever, I can measure. But and I have to be honest with you, as a market maker on a trading floor, it was measurable. The human reaction was measurable. You were standing in a crowd of people on a floor that had crowds of people. So you could get a read on what emotionally people were feeling. We're watching a screen. We're watching just this blip on a chart. And that's producing the internal emotion for a lot of us, but not on that same factor. We have removed human emotions from our trading. And I guess the verdict is still out as to whether that is a good thing or a bad thing. Now, I think if this was all human, if we had to have the trading floors doing the trading, it would take a lot longer. Because the one thing that I noticed is that gold ended down 8%. I was like, well, where? I know they have them, triggers. They have triggers. Well, they'll stop the trading. I didn't see any of those in gold. And the low in gold was additional $200 lower than where it closed. The low on Friday was 4,700. Now, that's for this week, let's say. That's for the week. The low was 4,700, and that was on Friday. The high was 56.28, and that was on Thursday or Wednesday. I was like, oh my God. So within those 2 days or 3 days, we had a $900 spread, high to low. Never ever happened before. Never happened before. So, you know what it does? It makes me think when the time comes for these equity markets to give it up, I mean, give it up, what's it going to look like? What's it going to look like? I don't have, I suppose I could look it up to see what silver volatility was or gold volatility. I know there are measurements where they do measure volatility. It had to have been off the map. I mean, if we just even were looking at, I'm just going to go down here to the products. We're just, look at this. That's like 100. This is next week's 152. That's the implied volatility. This came down, the second came down a little bit, plus or minus. Check out that number, folks. Check out that number, the plus or minus in the come on, in the volatility. For Monday, it's 96.71 plus or minus 332. That's implied vol. This is what created. This was what got created on Thursday and Friday. Look at Tuesdays, February the 3rd, 611 or 612 plus or minus. So the volatility is coming at 152% plus or minus 612. Oh my God. This is not normal. This is dangerous. How much of this can swing? Do you know what this tells me as well? We can swing and go back the other direction. We literally can. And that is going to be incredible to watch. It's going to be incredible. Um, I did trade some on Friday, but it just was like insane, insane. And I was using the micro. I dare not step into a full-fledged contract. Oh my God. You're dead in seconds. In any case, or very, very rich in seconds or dead in seconds. But this is my point. I want to make sure that we understand the functionality of volatility, the functionality of implied volatility in an option. And if you're going to step in thinking like it's a good choice to go trade options, it may be, but understand what you're walking into and how fast it can go in either direction. If you're looking at an implied volatility, say for Monday of 96 or 97%, that's the implied volatility, but it can plus or minus an additional 332%. Think about it. You go in and decide, well, I'm going to, and here's the thing, because most people go like, well, implied volatility, it relates, and then it switches over to premium. And you're looking at the premium in an option and going like, I got to sell that. Well, let me tell you, you might sell it, but your hedge, you're not going to, it's going to be too difficult. You won't get what you think you're going to get. The prices are moving that quickly. And algorithms, which are trading it, are way ahead of you. So caution, if you're choosing to step back in, or you are stepping in, or you already are in, and you need to trade options, do spreads, put them on together, take them off together. That's all I got to say, because a computer can do that. Now, let's go back to the charts. Let's bring this down. So what can we look for? Okay, if we completed intermediate wave 3, we're in an intermediate fourth wave coming down, and it's going to be an ABC. Well, this is the 5-year weekly. Let's go to the 3-year weekly. Guess what? We still got one big straight bar. Now I got to drop it down to the daily. Let's look at the daily bar. One big drop down. These are intense moves. I'm looking for an ABC. So is this 1, 2, 3? This is a 4. We're going to come down again in a 5 and put in wave A, possibly, possibly. Where's my first or realistic support if we're coming down in wave A? Right there, 43.11. Remember what I said. Remember what I said. I am always going to go to the stacked fourth waves. If we start coming off and I got nothing else and my fibs are like to the moon, Alice, or whatever, I'm going to start using my fourth waves. I use that fourth, then I use this fourth, then I use this fourth, on so on down. There's a small four internal, but you got to go back out to your weekly chart and you got that fourth, and then you got that second wave, could produce some, but look how low that is. Now, back down to that daily. So if I got 1, 2, because that's the best I got to do, and I could drop this down to a 30-day hourly. Now we can get a chance to look at see what happened inside, right? Like that, reaching that bottom, and boy, it just cruised up out of it. So from here, that's the high. 1, 2, and do you see how close it got to go back again? That's 26.80. This is 25.90. They went back again on the 28th. I was like, you're going to go take it out again. It was amazing to me. So if I had to start counting this, double top, I'll give it that. 1, 2, 3, 4. Yep, no overlap. 1, 2, 1, 2, 3, 4. It's the best you're going to do. Now we can take it out of here and we can put it into uh, a line chart, catch it. 1, 2, 3, A, B, and then I got 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. So I think I could get an ABC out of that. Or 1, 2, 3, 4, 5, and I'm going to get a 5 out of it. That's probably more in line with what we're actually going to see. And because of the intensity, it's not coming down in 3. My thoughts are pure that it's coming down in 5. So let's just say 1, 2, 3, getting ready to finish. We got one more down, get a little 4, come back down. Or that is the little 4, and we come back down. So where can we go to start to build fibs internally to see where we're gonna start hitting this thing? Well, this is actually the higher. That was a spike. This was a print. So if I take it from there, and I am going to go 1, 2. I'm going to go 1, 2. Well, there we go. 1.618 is 46.83. I can add, I think I got it probably down there. And I look at 2.618 is 41.90. So, and to be honest with you, I can't say, oh, no, I'm not going to do that. But when I pull it back open and realize this is the fifth, and what I'm looking for and what I have back out here, right? 41.90. Ooh, look where it is, just below that 4. So yeah, it could be a realistic wave A, or wave A could come all the way down to here, right? That's just 382, 4, excuse me, the larger 4, that's in play. The intermediate fourth wave, that's in play. So either that, this could be wave A, we rally back up on a B wave. So that's the other thing I want to make sure that we understand. And it's not going to be like, oh my God, it's all over and now we're going to come back. There will be a trigger. Unfortunately, I want to tell you where I think it's going to happen. I think it's going to happen either something seriously is going to happen internally in our own country here, or it's going to be Iran. I'm also seeing in the news today without any reporting from a U.S. agency, CNN, you know, any of them putting out news. I think maybe NBC may have. There have been explosions reported in Iran and at, I think, a military building. Israel's already saying we have nothing to do with that. That leaves Trump's big and glorious armada that he has sent over there. Are they beginning to fire on Iran? Have we declared war on Iran without the backing of Congress? Or maybe it does have the backing of Congress. I have no idea. But that's the big question. And if that has started, then yeah, I'm looking that what we just saw going to the downside could reverse and go right to the back to the upside. It really can. And that would be a strong enough trigger because it could be a world war. Reverse again. I'm not saying that's what is going to happen. We don't have evidence. We don't have anything. But a lot can come out between today, Saturday, and tomorrow, Sunday afternoon, when Globex reopens. And then, of course, Monday, when our regular session opens. But again, I'm not going to look at this at the moment as like we've hit the low of wave four and now we're going to rise in wave five. Is there a possibility? Of course there is, but it's being guided by events, events that turn the favor back to gold. Gold dropped out of favor for 2 days. Don't forget that. Prices are too high. That was made known. And a lot of it was just math. A lot of it was just like screwing people. All right. You all got too long, too soon, blah, 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 blah. And boom, you got taken out. The other thing I don't like to mention, but I will because I've been following gold and trading gold for a very long time. Gold dealers. Now, this used to be the humans that traded on the floor of the COMEX. They love to wash out weak hands. This was just something that we all knew as traders. We're getting all retail come running in. Got to have the gold come running in. They're buying gold bars. They're buying gold watches. They're buying gold. And then suddenly, okay, that's enough. Boom. Not $600 worth. There were other things in there. I mean, that's when gold would drop like maybe 50 or $100, and you'd wash out the weak hands that just stepped in. This was a massive, massive swing lower. $900 from the high to the low thus far. So was it washing out? I imagine maybe some of it, but it was a bloodbath. So if we've entered into a war and we just aren't being told yet, or if Iran starts to strike out against US or Israel, that's the start of a war. I would suspect that it could escalate very, very, very quickly, or maybe not. I'm hoping not. And if it does, then I would expect gold to run back up. And you can put in several things. Once it gets going, you can go from the low and you can put in fibs on what you think could go back up. Do I think we go back up to 5,600? My first response would be no, I don't think so. But I'm now learning, at least in gold, you don't do that anymore. You don't make statements like that anymore because you'll be held to it. I cannot. This is everything you say here, folks, has got to be what we used to call when you put in an order in the market in the old days, not held, which means you're not holding the broker to the price. You're giving it to them, not held. So please just do the trade, not held. If you came back and you didn't like the price, too bad. So again, this is what I'm saying. It's just according to what I see and Elliott rules and guidelines and Fibonacci levels. It's not held because it all can change so quickly. We've witnessed that. So again, we'll see what happens because if something comes out and says, hey, nobody did anything inside of Iran, it was internal. And then again, I think we can come back down, get this wave A in, wave A. So it's going to be a minor degree wave A because it's intermediate wave 4. Minor degree wave A, it'll come down in 5, maybe get down all the way down to there. Because once it breaks there, which it's already been to, basically, then that's our next level, 2.618. And that's just below that support at 43.28 down to 41.90. And again, how it was moving, that's nothing. So we have to allow for those moves. But there's the support, there's the fib, and then next support outside of that is here at 39.60, 39.77, and then we have that fib at 38.73. So on a daily chart, by the way, the only thing that's happened so far is it came crushing through and didn't actually turn the daily 20 down, just turned it sideways. Because see what it did? I'm going to get this out a little bit. See what it did? It came down, smashing it, which forced it sideways, and then came back up quickly and got back above it. So now it's just sitting there, like trying to cross the road or trying to decide. So that tells you on a daily chart, the 20 is like, I have no idea. Well, we could go up, we could go down. Um, let's just recap real quick. I got to get over to silver. I believe that we have completed up to, I don't want to put it all the way out there because it just crams it up. Um, all the way up to intermediate wave 3. That's what I believe we completed at 56.27. And that we're started on the intermediate fourth wave down. Intermediate wave 4 will consist of an ABC of minor degree. So I believe we are putting in minor wave A. And from the initial wave pattern, it looks like it's going to come in as 5 waves down, of which I think we have 1, 2, 3, and possibly 4 as complete. And then we get a 5th wave down, putting in minor wave A. We get a minor B wave, rally back up. We can use straight fibs, but we have to think that what could propel it and understand that it's a B wave. And I encourage you all, pick up your books on Elliott. Go over to Elliott Wave International and search for what is the personality of a B wave? What are the characteristics of a B wave? Important to understand because B waves are notoriously shoot straight up and drive. And that's what could happen here. Why? Because what we're looking for is a C wave, and that's the A wave was pretty intense. C wave should be equally as intense, which makes the B wave a fool's day. So that's kind of where I'm going to leave this. You're looking on the daily, how we went from extreme overbought to boom. We're not oversold yet. By far, we're not oversold. But boy, they started correcting it there. If I push this up and we look on a weekly chart, we're still extremely oversold. Excuse me, extremely overbought. Well, sorry for that mix. And if I go all the way out to my maximum monthly, we haven't even turned yet. We haven't even turned yet. We had a $900 swing and we haven't affected the monthly, the maximum monthly chart, which of course is years in length, but we haven't even got it to go sideways yet. Intense. This is all very, very intense. All right, let's go over and take a look at silver. Talk about intense. All right, so let me see if I can get that. There you go. That's what I want to see. I know I'm crunching it all down here, but what we have is an A, B, C, W, an X. Now, others may not agree with me, but this is kind of how I'm coming up. That's what my largest count is going to be. It's a primary degree. I had a W, and you can see there it is. There's the W. And I have an X, and I have this Y. And it was the stem in this Y wave that absolutely went to the moon. Technically, I could take it from that fourth wave, which is 27. Silver price is 27th in April of 2025. April of 2025. So by January of 2026, so a scant 8 months later, 8 months later, and silver was hitting 100. Where do you give me that? 122. Wow, incredible. Now, um, let me get this open just a little bit. Talk about fourth wave parabolic. There is minor wave 5, minute wave 5, minuet wave 5, sub minuet wave 5. So basically, from the minuet fifth wave, that started at 70.51, $70.51. And that started, oh God, I want to tell you, you can look up and see it, January the 1st, 2026. Basically, January the 1st. By January the 30th, actually the 29th, we were hitting 122. We all saw it. 122 in a month. $50 in a month. And silver. Out of control. Absolutely. And same reasons that we talked in gold exist in silver. Silver margin requirements, highest I saw was $125,000. I'm sure they were even higher. $125,000 per contract in silver futures. And it still was a madhouse. Volume increases in the SLV. In fact, let's just go over and take a look at SLV options. And let's see what happened on Friday. Check it out, folks. This volume, never, ever, ever that high. Never that high. Total of this is on Friday. 6,896,000 options traded on Friday. A little bit heavier on the calls, but pretty much equal. 3,617 calls, 3,278 puts. Wow. Wow. And SLV itself, 510,687 contracts of SLV. Holy crap. Now, what's the range? 92 was the high on Friday. 69.12 was the low in SLV. Holy crap. Implied vol, just under 100. Now, we can come to, look at this. Look at the volatility out to the end of February, which will be starting into the beginning of March. And that came down a little bit. This was up over 100 on Friday. They pulled it in a little bit. Maybe because some expired, et cetera. I don't know. They didn't expire, but they got closed out. Look at this volatility out to June. I want to tell you, if you work in a convexity model, whoo-hoo, you're making money simply because of implied volatility. Now, check it out. This is for Monday. 182% plus or minus, it's not as high as gold, plus or minus 8. But 190% volatility, implied volatility. Those options are very, very rich, but you're not going to touch them. I wouldn't. All right, back to the charts. Okay, parabolic, pretty much from April. It just started to go. This was increasing the margin requirement. It didn't stop them. Didn't stop them. And this is the last one that actually on the monthly chart, it's the month of January. Holy crap. And that's an SLV. So let me go over back to here. So same deal. And here we have it. So let me bring it down. Let me swing it open a little bit. We have the ABC. There's the X. There's the Y. I have been talking about, yes, this is what I'm looking for. I'm looking for the completion point of the Y. And the market kept spiking higher and spiking higher and spiking higher. Did not suggest that it wasn't going to end, just brought it up to higher levels that I just didn't think we're going to get to. When it hit 122, if it had managed to go through that with another spike, our next level was 134 to 140, believe it or not. And with the intensity that it got to 122, going up like there, that's panic. That's pure panic. Cover or we cover for you, or they did cover for them. So that's a clearing firm coming in and saying, you're out. You've lost all your money. You can't meet your margin requirement. We're closing these positions. And bam, they did. I'm not saying that's exactly what happened, but that could be the key scenario. I don't know. All right, so finishing the Y wave. What comes next? Another X. This one I find tough because if I had to measure it, what do I look for? Well, first thing I look for is that four. We got this four up a little bit higher, but we already went through it. We got this four, we already touched it, right? I'm going to start coming down. That's 3 week. Look at that. So we haven't gotten down there. That's 68. That's that four. Then we have this four, which is at 45. Now, I got to go all the way back out to that monthly flow, folks, because somehow I got to put it in like this. If I'm just going to try to determine where, I got to do the whole, well, I actually got to do the whole ABC because I got to do the Y wave, and that's here. Now, so let me put this in the form of, because I think it'll be in this color, and I'm going to put that in that color, put it there, and now I want to come into 382 to 50% for an X wave. And that's I'm just kind of assuming, but maybe I'll go 618 as well. Yeah, it's actually not that bad. Um, Now let's come back down to, well, let's do it all the way down to there. Look what we did. We came smashing through the first 382, right? Because we got down to 73, and then we closed back up at 85. Breathtaking, because it's still taking away my breath. Now, if I had to come up here, and we're going to try to count this little thing, there's the high, all right? There's the high. So we have a 1, 2, 1, 2, 3, 4, 5, 3, 4. So we're still going to come down. So really, what does that tell us? We have a shot at getting down to 66 here. Now, again, these are for the X wave. So what should that X wave look like? A, B, C. It should be an ABC. So like gold, we should be forming an ABC pattern of intermediate degree to put in this X wave. So here's the other thing that I'm finding amazing. We're putting in intermediate degree wave A in a couple of days, which normally we would look like for a couple of weeks, maybe a couple of months. we cannot deny that this C wave here started back in 2022, finished in 2026. So let's say, three and three quarters years, and then we're going to finish intermediate wave A in a matter of days. It's a crash. It's a definitive crash. Now, same type of deal I think we got going on. I got to bring it all the way back down. And we're thinking that we basically may have already put in wave A, and we're going to do a B wave. So no matter what we do, what you're going to have to do is you look at, let me go one more right here. Okay. So there's a possibility we come down and we move below that 73 level. But once it's done, you're going to put fibs, just straight plain fibs in place. And what do we look for from a B wave? 50 to 62%, 97 to 103. Holy crap. I'm keeping it clean, but holy crap. Minimum 33.82, which is 92. Holy crap. After this, plow down through it, run it all the way back to it. And so what's that going to tell you, folks? Be prepared, because what's it telling you? The volatility is going to stay where it is to higher. The implied volatility will be here and higher. It's not going to start to cave in. And not with these moves, because guess what happens after the B wave? We get a C wave all the way back down. And again, we're wrapping a little bit of space around it, saying that, well, we've already gone through that 3A2, so we know that that's possible. But here's this 50% is 66.73, and the 618 is 53.67. Both of those put together, there's the fourth wave. Here's another four, but that's down to 29 or 30. And I'm like, well, I'm not really looking for it to go that deep. But with the volatility, I have no idea. So my thoughts are similar to what I have in gold. I'm not looking for it to get all the way down to that intermediate fourth wave. Or excuse me, the minor fourth wave over in gold. Here, because we're really dropping in an intermediate degree for primary, I'd be looking for it to come down to the primary. And so that would be the B wave. And that's way down there. So I have to go inside of it. And my thoughts are, here's what we have for the primary ABC, for the X wave. So inside of it, we have to figure, well, where can we look for ABC? There's our one, here's our first fourth, and we're back at it pretty much. We're back at it. That's where we closed. That's support, that's resistance, aka support. But here we have additional down here at 69, then we have a fib at 66.73. I'm going to look for it to kind of like, this is not done. Or if it is, we're coming up. Let me go back down to my hourly. We're coming back up in a 4. We're going to come back down in a 5, and we should go below there. We're going to have some price support at 73-ish. We have some price support, yeah, I know, at 70, 71, and then we have additional price support at 70 to 69, and then we have fib support at 66.73. I would think that if that's going to be wave A, we get a really decent B wave. If this is wave A, not sure how I can do that, but let's just say if, then you can see where your fibs are coming back up. So the volatility remains, folks. The volatility, aka velocity of how fast it can move, it remains in the market. And so that includes how fast is it going to go up? I think all the sellers kind of really abandoned ship. So if there's going to be people that need to buy it, they're going to have the same thought, right? I'm not going to sell this here. I want you to run it up to 110 or back up to new highs. Think about it. It's going to be it's going to be crazy for a while in this product. But if I had to take it off of there, here's your fibs coming back up. Either that or we've already reached four, maybe four gets us back to 92, and then we fail again and come back down and create a new low below 73.84 to get to a low where we can put wave A. And that's going to be intermediate degree wave A. And it will have unfolded in 3 to 5 days, which in my poor brain is just going like, what? But it's possible. New day, new new things to really put into play. Again, I want to tell you, if this was just humans, we didn't have algorithms to trade for us. They maybe have come up with the decision on what to do or give you a level, computers, right? It's been quantitative for a while, but the actual physical act, it would take us a lot longer to get to these levels. A lot longer. We've removed the human factor. Wow. I hate saying that. But that's what we've done. We've removed the human factor. Buckle up, people. All right, that's silver. Let's go take a look at platinum. I know this is long. I've been doing this is over an hour already, and I thank you so much for hanging out with me, if you still are, because this has just been incredible. Let me go out to my monthly max on this guy and open it up. Didn't quite make it to the 1.382 for that irregular B wave, which was 29.79, or let's call it 29.80. It did, however, get up to 29.25. I will tell you that I'm going to call it a victory on the level because it got above 2,900. And then what did it do? It crashed. It crashed. Unbelievably, it crashed like the rest. So here we have it, month of January, 29.25. That's the high. 1980 is the low. $1,000. Oh, just under. But $1,000. Let me see. Let me go to my daily. It hit that on the 26th. It hit that on the 30th. Holy crap, folks. And also on the 30th, we cannot forget, on the 30th, the high was 26.69. The low is 19.80. Holy crap. I don't know what to say. It's so amazing just the strength behind this panic, behind this selling. Now, what am I looking for? Let me take this back out here. This one's going to be a little bit quicker. Um, but here we are, primary B wave. So there's the primary A. Here's the primary B. We're in a primary wave C. And I got to be honest with you, you can bet your boots I think this is where it's going to end up. Before all is said and done, I think this is where we're going to end up. And let me go back over here and do this again. I want to get this whole picture back in here. There was a primary 5 that was, so we could say from that high, which was 23,008, it got down to 562. So why wouldn't it get down to, let me get back over here. I think 1.618. There we go. There was the update. 100%, 1162, 1.618, 649, which is still here. That's 562. So, oh, 64.90. No, I don't think it's going to go there. Take it back. I think we can get back down into here. Not that low. I'm leaving it there because the normal would be 1.618 for an irregular. But I kept thinking it was 649. No, but I think we could get back to here. 877 down to that level. Forget that. Let me take it off. I apologize. I really thought it was saying 649. I do think we can get back to here or to there. But definitively, I do think we can get here. 1162 after 29. Yeah, I think definitely. Same deal. It's going to be the C wave, but it's different here because it's a C wave. It's going to be 5 waves of intermediate degree again. So let's bring it down to the daily. 1, 2, 3. 1, 2, 3. That's all we got so far. We got a 4. Yeah, see where it ended up? That's where it closed. And then so we can have support here, and we're looking for 5 waves down. So 1, 2, 3, we got a 4, we got a 5. Maybe we find some support there. Maybe we then find support here, and ultimately we can find support there. Again, how am I going to put it in for the internals? I got to let them fall a little bit to see how that's going to all work out. I mean, I could run it this way, but I don't think it's going to be accurate enough. So I'm going to have to let this play a little bit, and I'm going to work on it to see what we could come up with. I could do this. Let me just see. And again, accuracy, I'm not sure, but I just run it for this whole thing to see what comes in. You see, we're almost down to that 50%, which is that 4, and I think that could put in this third. And then we get a bounce, and then we come back down, and for an A can come down to 1698, 1700, and then we get a bounce. We get a bounce back up. Now this, if I bring it back down and look at this chart, well, it could have actually. 1, 2, 3, 4, 5. That could be 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5 of 3. Wait a minute. We might already be there. We might get there, and that could be intermediate wave 1. So we'll see. But if you're playing in platinum, please be very careful because this is even thinner. This is a really thin market. I think it's a dangerous market to kind of play in, and because it can cost you a lot of money if you're wrong. All right, I got to wrap this up. This has been a long update, but I tell you, because of what happened, it deserves it. It deserves the conversation. I thank you for your time, and the next update will be next week.